Good day, guys. It's been quite a long time I upload a video. I want to use this medium to still share my analysis on EURUSD from higher time frame to lower time frame. Then I'm going to emphasize on liquidity grab and market structure. So from the monthly outlook on EURUSD, from the channel here, you can see that EURUSD is still on a downtrend, still ranging between the channels on the monthly time frame. So you can see the channel still moving in. There's a break here which tap on this trend line now gave us a double top, and tap here is moving, so we are expecting it to either tap this trend line once again, either it breaks it or it goes back into the channel. So that's the objective of the monthly. But as you all know, my strategy start from marking out the swing points and mark out the monthly swing points, the highs, the swing high and the swing lows, using different colors to differentiate that. So mark the high and the low, then I mark the previous high and low of the candle. Why am I doing this? Why am I marking the swing highs and the swing lows and the previous candlestick? Marking it gives me a clear support and resistance. It gives me the range of where I'll be working with. It gives me a clear reaction and clear objective of what I'm about doing on any pair I'm analyzing. So that's why I mark the previous high of the candle and the swing points of each time frame. It helps me a lot. It helps me to differentiate where I am. If there's any break, I'll wait. If there's fake out, I'll wait. If it's a continuation, I'll wait. That's the storyline behind this, my marking out of previous high and previous low. So on a higher time frame, that's just the objective, but on a lower time frame, the objective is different. So going to the weekly time frame, I look out for the previous candlestick, the high and the low, check if there's any swing points I'm supposed to adjust. So that's what I normally do. So this is the framework of the previous weekly high and weekly low. Then the current one, because market has closed, sometimes I do market, sometimes it's not relevant, because when market opens, sometimes it will move a bit before, but there's no point. If you want to mark it, you can mark it. If you don't want to mark it, you can mark the previous candle and leave the one that just closed, so that you use the 1 hour time frame to mark it. Then look out for the liquidities and the swing points, or the swing points that you see with your naked eyes, the ones that you see that are closer. Now there's liquidity here, trend equal lows here, which is acting as liquidity here. So you can as well mark it as a swing point. can mark it as a swing point, but there's no need adding many lines to your chart. But it doesn't matter. It's your chart, it's your personal details. It doesn't matter. It's none of anybody's business that you have many lines, so far as you understand what the lines is all about. So now go down to the daily time frame. Because the daily time frame, there are so many dodgy candles, which shows us that there have not been much activities on EURUSD. This is the previous candle that closed before this one that just closed now. You can mark it. Let me use another color for that. Now mark it. If you look at this place, the weekly and the daily almost match together. You can either adjust it or you add another line for you to know that there's a double information on that line, so that you know that that place, that support zone, is very active, is very valid and strong. A very strong support zone which denotes so many informations. So when you zoom out, you'll see that there are lots of spaces that price is supposed to grab this liquidity and push down, lots of spaces in between this daily time frame. So what is the information on the daily? The information is that EURUSD has been ranging for like 2 days. This is Thursday, this is Friday. It did not give any food, as it has been moving up and down, and it ended as a dodgy, but it breaks the low of the previous of Thursday low, still showing a very strong sign. So let's go down to the 1 hour to see if we can understand what we are going for. Now, what do we mean by this? Is just the full analysis that I'm giving, but I'm going to still hint on liquidity and what it means. So from here, see the way the price closed on the 1 hour. Price tapped this place, tapped this support zone, and there's no much volume on this place. So this was the previous daily high, so we expect price to at least tap through or break through it, and there's liquidity here, which I believe that there's liquidity here. There's liquidity here. That's the buy side liquidity, and there's a supply zone or a resistance. I don't know what I'll call it, but it's acting as here. Let's say that it's acting as a supply zone, because since there's liquidity here, this other block can act as a supply zone. So as it's acting as a supply zone, we expect price to tap into this place before having a strong move down. And liquidity, if this place is grabbed, we expect price to break through this weekly swing point, then give us some reactions. We trade what we see. You wait for price to react and gives you a clear opportunity for you to enter. So you don't just jump in. Maybe you say because it's going to buy, or it's going to move down, or it's going to go back to this support zone, you just start taking your trade. Just allow this trade, because it's still in a range. If you watch here, here is the previous daily high and the previous daily. So price is still in between this place. So you wait for a reaction for price to break out from this place, and once it breaks out from this place, that's when you take your trade. So that is what I'll be looking for on EURUSD. And at the same time, I want to talk about liquidity. Liquidity is just the swing point. Like here, you can see that here is another swing point. Either swing high and swing low is liquidity. Then we have what we call fair value gap. Fair value gap. And anywhere you see fair value gap, it's a place where 2 weeks meet. Let me mark here. There's a fair value gap here. So there's a wick here, and fair value gap is always between 3 candles when there's no connection between the upper wick and the lower wick. In between this particular middle wick, there's no wick that is attaching to this place. That is what I mean by fair value gap. Okay, here and here, these orange lines is what we mean by fair value gap. And as you can see that where once price tap through it, it acts as a reversal point. This fair value gap acts as an internal liquidity. It's a form of order block, but it acts as an internal liquidity, and this internal liquidity is always very strong, more than this external. This one is called external. We have two types of liquidity though. This is internal, but acting as an external here, because it's just a trend line liquidity. So this fair value gap liquidity, if you can be able to detect it, you will see that price normally moves from there almost in all time frame. Any time frame, you can see it on 1 minute, you can see it on 5 minutes. Any move you want to take, once there's a liquidity fair value gap, its price always reacts from there. So now price push down, create this other block, push down, clear this liquidity here. There's another liquidity here. There's another liquidity here. So price cleared it, and each time price clears one liquidity, it means that it have collected some money. It has grabbed another here. You now see it pull back. This liquidity stopped it halfway again. That's the pullback you saw, and price now came down, break this low. That's the information that this 1 hour is giving us. Break this low, and as price breaks this low, it now hit this strong support zone. You see that the weekly and the daily is clashing here. That's why price hits here, showing us a strong support zone is around this place, which might push price back to this place or back to clear this external or partial internal liquidity here. Then now use this supply zone for the downward movement. So that is how you get the information. That does not mean that you base on your POI on one particular point. Like here is a POI, but not as strong as, because price have tested this place. But this supply zone here, price have not really tapped through this supply zone. Price have not truly tapped through this supply zone, because price tapped here, moved here, tapped a bit, now gave us induced this place, now gave us this liquidity. So we'll be expecting price to either go back to this supply zone, or maybe will not get up to this supply zone. Maybe it might take this freshest zone, which is this particular place that is acting as resistance. So that's why your point of interest should be this other block. So we might be expecting, we anticipate, we don't stick to analysis. Like this is the other block. Let me mark it separately. This other block here. So price might still obey this place because this is the freshest zone. This one has been taken partially by here, which formed this inducement here. So instead of basing your point of interest on here alone, you can use this one as your POI one, your point of interest, the first one, and this place should be your point of interest, second one. And what are those confirmations that you need for you to know that yes, this point of interest is the one that is going to be valid? You move down to your 15 minutes, and when you go down to 15 minutes, once price tap into this area, that is your fair value, that is your point of interest, and maybe it gives you a reaction like M pattern, that's when you follow the ring and sell. But if it's it gives you a pin bar, that's when you follow and sell. Then if price breaks through here and decides to act on this place that is acting as an external liquidity, that's when you can use this as your second POI. Sometimes price might decide to take this other block here, go back to this supply zone. So rather than taking trades now without you getting a full confirmation of what is happening, you rather wait for price to tap through all here. Sometimes price might just decide not to tap through any of this and decides to move and break this support zone and start moving. So you wait for price to react before you react. You don't just take your trades. Trading is patient, and with enough patience, you know what you are dealing with. You are dealing with the market makers. It's not our making. We only obey what price is doing. We don't force price to do what we want. So you wait for price to give you a clear head, either a pin buy, double top before selling. Then if price breaks through here, is either you join, or if your entry confirmation or your entry signal is not clear on this 15 minutes, forget about it. Don't just take the trade. It's better you miss out on a trade than using a fear of missing out to take a trade and you now get confused and start panicking. That always affects our psychology. So it's best for you to know when price hits here. If it gives you a pin bar, you now join the sell. If it's not giving you a clear confirmation, you wait for you to tap here. If it's not giving you any clear information, by tapping at these three POIs, you just allow the price to do its thing, then till it obeys your own confirmation. That is the source of trading and the joy of trading. Thank you, everyone. I hope this will help you to grab something for this week. And as for EURUSD, still anticipating a sell from there, from any of these POI. Thank you so much. Bye.